Ladies and gentlemen, good day and welcome to the Rico Auto Industries Q4 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod from S&CL Technologies. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and thank you for joining us for Rico Auto Industries Q4 and FY25 earnings conference call. From the management, we have with us Mr. Arvind Kapoor, Chairman, CEO, and MD, Mr. Kaushalendra Verma, Executive Director, Mr. R.K. Miglani, Executive Director, Mr. Rakesh Sharma, Chief Financial Officer, and Mr. Ruchika Gupta, Company Secretary. I now request Mr. Arvind Kapoor to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you, and over to you, sir.
Good evening. My name is Arvind Kapoor, and I'm sitting here with my colleague. I have Mr. Rakesh Sharma, who is the CFO. Along with him, I have Mr. Kaushalendra Verma, who is a director on board. Then Mr. O.P. Agarwal, and I have other colleagues looking after marketing and my company secretary, and everybody sitting here. And in the outside, on a positive note, the GDP of India will be growing by 6.2% this year, even though it's been lowered by the World Bank and also by RBI, and we are talking about 6.2% plus. And the last time I had said that we should be in between 6.2% to 7%. That's what we had indicated based on the information that was provided to us by the government and by all the industrial bodies as well. We must congratulate ourselves. We have become the fourth largest economy in the world, and hopefully we'll become the third largest in the next 3 years. If the economy keeps on growing this way, certainly before the end of 3 years, we should be the third largest economy. There is a lot of geopolitical tension that is there these days. Primarily, one is, of course, the wars that are going on in the Middle East and as well as in Europe, but also because of the trade tensions that are there, primarily because of they all originate from the US. And so as a result of which, we are seeing FTAs being signed by bilateral arrangements being made with various countries. With UK, we have signed, even though implementation might take a while, but I'm sure the Indian government is very aggressive on signing further bilateral trade agreements with EU and many other countries around us. And hopefully one day we will also sign with the US, but that might take a little while. And the target was September, but we're not very sure as to what really happens there. And it totally depends on the team, the President of the United States. Talking about Rico, our turnover has gone up by 2.5%. We had estimated a better growth this year, but there were some issues with the exports. If I talk about exports, in the year 23, we had exported 500 crores worth of goods. 24, we came down to 422 crores, but this current year we are talking of, that is 25. Our exports came down to 351 crores. That was primarily because BMW, the electric vehicle business dropped by almost 40% in Germany, in Europe, and that had a major impact on our sales. Now, this current year that we are 25-26, the exports will go up to 380 crores. And by 27, the orders that we have in hand, we should be crossing 500 crores, back to the year 23 position. Our turnover this year is 22.12 crores, and we are estimating our turnover to go up to 2650 crores this year. These are based on the the projects which have been implemented last year and which have come into production this year, and some of the projects which are getting live this year. And everything seems to be doing well so far, and primarily driven by the domestic demand, but the export demand will also go up. They say the exports going up to 380 crores or 351 crores, but our shipment will be much more, primarily because we would be stocking in the US for the sales to start from January, February next year onwards. And that's the reason that I'm very confident that next year we'll be crossing 500 crores as far as exports are concerned. So this year our sales turnover expected is 2,652 crores. That's what has already. That's almost 20% higher than this current year. And the year after that, the plan that is already in place, where the orders are placed, is also another growth of about close to 15% plus. Last time I had announced that last year we received orders worth about 720 crores, and these would be implemented in the next this year and next year and the year after that, and that is the 3 financial years. And this year our target is to pick up another 650 crores worth of orders, which would be implemented partly this year, partly next year, and the year after that. Out of 650 crores, we've already picked up orders for 70 crores, where the deliveries have got to start from this year onwards itself. So we are very happy about that. These are the add-ons to whatever budget we have prepared for 2652, but we are sticking to 2652 crores of turnover this year, this current year. That's 26 we are talking of. The business seems to be good, but the only problem that we are all facing is the uncertainty of what happens in the US. The exports are taking place. The new orders that we had received, we have started delivering those goods. The shipments are being made here, and the tariffs have been applicable. But at the moment, I don't think the customers also have a choice. They need to pay up the tariff. And we have settled with some customers, but we are settling with the other customers as well. So this should be okay till there's a trade agreement which is signed between India and the US, where there could be some negotiations on the reduction of the current tariffs that are there. So this current year that we are talking of 25-26 is going to be a good year, 20% growth that we are anticipating. That will also help us to utilize the equipment, and like I mentioned in one of the meetings that our iron foundry, our utilization capacity was only 50%. This will go up to almost about 60-65% this year, and next year we'll be crossing 80% utilization of the grey iron foundry. And in the aluminum side, there we were at 62-64%, and we should go up to about 60, to almost about 75% this year, and then next year we should be in the region of about 90%. That's the current equipment where the investments have already been made, and capacities which had freed up partly because of the efficiencies that had come into the system, and also there was some reduction of some export orders, and that also freed up the capacity. But we'll be able to utilize the total capacity in the next 2 years. The investment in Hosur is going on. The building is getting ready, and the total investment that will take place there is close to 220 crores, but spread over 3 years. Partly this year. This year would be about 70 crores, and next year would be about 100 crores, and the balance would be in the third year. That's how there Hosur is going to be catering primarily for Toyota as well as Aisin Seki, and these components are for the hybrid as well as electric vehicles that Maruti and Toyota would be producing. The defense is also doing well, and the shooting ranges that I had mentioned last time, that we've delivered, I think, over close to 40 of them, and we are delivering almost 10 to 12 ranges per month, and there are future orders that we are expecting, and that should be interesting business. We've also started delivering to we went in the railway business using the current capacity of casting as well as machining that we already possess. We've already started supplying to the people who are supplying to the railways, and in the meantime we are getting the RDSO and other approvals which are required to be done, and we are hoping that the growth would be very good in the railway side. And this is primarily utilizing the current capacity we have with the minimal investment that would be required to be done. This is the new business that we have taken up, so that one is to add on additional lines of business, defense, like it took us almost 10 years to come into defense to actually start delivering. But railways, we've been fortunate, we could start delivering within, I think, 2-3 months of after we had decided that we will get into the railways. So things are moving fine, things are moving good. We have not factored the railway business in the current year, but we are hoping that we should be in the region of 70-80 crores plus this year in any case, if not 100. That's what the target is. That's what I wanted to say, and we are open to questions. And my colleagues also sitting here to answer all the questions.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to participants, please press star and 1 to ask a question. The first question comes from the line of Bhaskara, an individual investor. Please go ahead.
Hi everyone, and good afternoon, sir. Thank you for giving me the opportunity to ask the questions. The first one is, in the current quarter, how much defense we actually delivered in turnovers? How much turnover we did in the defense?
In the last quarter, you mean?
Yeah, last quarter, yeah. Q4.
What is the figure?
Because the consolidation and the standalone difference is only 26 crores, and we have showed, I think, one-time loss of 6 crores. So if I remove that 6 crores, the profit will be like around 6 crores. So that is a good margin. If I look at the only consolidated revenue after removing the standalone. So I'm not sure whether it's from the defense or it's from the wheels business. Yeah.
I'll just give you the right figure on the defense.
Okay.
Yeah, and but that losses I had mentioned last time also, and that is a one-time loss of 6.25 on the sale of assets, and which was that will not appear there.
Okay.
एक मिनट इससे पूछो ना कितना था यार.
बीच में रिपोर्ट उसके लिए दिए ना, देखो अरुण वाली रिपोर्ट में.
इस क्वार्टर 6 crores बता रही है. This quarter there was a sale of about 6.8 crores in the defense.
Okay. So the defense revenue will come into standalone, sir, or in consolidation?
They come into consolidation.
Yeah, the difference between standalone and consolidation is only 26 crores, right? If I'm not wrong. In Q4?
No. Standalone and consolidation में 26 crores का फर्क है. नहीं ज़्यादा का फर्क है. 1658.
It is 1607 in standalone, while in console it is 2212. Or quarter also in standalone it is 415 and console it is 545. This is only the sales portion. If we include total income also, then it is 449 crores in console 549 crores in console and 422 in standalone.
Okay. Out of for 164 revenue, like, do you think the margins will be around 20, right? If I'm not wrong. What is the margin?
The defense and the margins are definitely better than the auto any day. And so since we are ramping up and the margins keep on improving over time.
Okay. So basically, as per your comments earlier, so every quarter we deliver 36 containers, right? We are going to deliver at the moment.
We have the capability of delivering 1 container a day, and we are wrapping up to deliver 2 containers a day. And now we are trying to seal the orders with the Navy and Air Force and others, and hoping that as those orders come in, that we are ready for it now.
Okay. Because the line was not clear while you were giving the initial comments. So I didn't get that figure actually. How much defense revenue we expect in the current financial year?
Well, it's going up, and we are hoping to railways and both put together. I think we should be 150 plus. That's what we are looking at, and we want this business to grow.
Okay, so that means like
in console, we also have Rico Fluitronics. There the growth has been very good, and in console that also adds up to the total figures.
Okay,
sir. Yeah.
Okay, sir. Thanks. And one last question is that about the new plant that is under construction, sir. Like it's going to take some time. For Toyota specifically, we are putting some new plant, right?
Yeah. At Hosur, we bought 12 acres of land, and the building is under construction. And by July, I think we got to deliver samples from there. This year end. By November, December, we got to start delivering samples from there, and and we need to start the building. First portion of the building would be ready by July, August, so that we can start installing the equipment and other things there.
Okay. Yeah, thanks, sir. That's from my side. Yeah, thank you.
Thank you. Participants, please press star and 1 to ask a question. The next question comes from the line of Jyoti Singh from Arihant Capital Markets. Please go ahead.
Yeah, thank you for the opportunity, and sir, congratulations on the good execution. So I just wanted to ask on the capex side, like you have mentioned around 220 crore capex. So this year, how much we are targeting to expend? Like next year, I heard 100 crore. And this year, how much we are targeted to expend? And which are the products that we will going to supply, and which are the OEM that we are targeting? And any unlocking is happening also on the new client side?
The 70 crores I mentioned and the 120 crores I mentioned, that is primarily for the Hosur plant I was talking about. That is for this current year. That is 26 and 27. But if you look at the expansion, that is also taking place for Maruti and for primarily Maruti and for some Maruti and Toyota. Toyota is the Hosur there, Hosur as well as in Chennai. And
GKN.
And there are customers where we have been supplying for a couple of years. GKN, there our sales will double almost. And with the other customer is Bremse. There also our sales are going to go up the sales are going to be very good there. And the advantage is the utilization of the current capacities that we already have. That's the casting capacity that we have, both in the aluminum as well as the iron. So we are very excited about that. That also helps us to improve the bottom line and the also utilization of the plant and equipment and also the people. But if you look at the total investment that would take place this in 25-26, we are talking of the region of about 150 to 155 crores, but that includes the dyes, etc. Also.
Okay, thank you, sir. And sir, if you can guide us on the margin side, like earlier we have guided 13-14% margin on the order for the domestic and 17-20% margin on the export side. So it does it remain same or any changes?
Let me redefine it. Export is always in the region of, it's always 15 to 20%. That's the minimum margin we work on exports. We are fortunate to get those margins. But if you look at the domestic, if you look at the two-wheeler, there the margins are on the lesser side. They are totally commoditized. If you look at the car industry, we get better margins. There we are in the region of 13, 14, 15%. That's where the margins are. And the commercial vehicles, we also get better margins. But it's the two-wheeler but two-wheeler is very important for us because it acts as a filler for the plants also. Utilizing capacities and other things that are required to be done. And because the volumes are very high there. So we do take advantage of that. And so we will, in the domestic, we will average out around I would say about 11.5%, 12%. That is the car industry and the two-wheeler put together. But with the competition of the exports, our margins dropped slightly this year only because the exports came down. If the exports we had the market had carried on, we would have our margin would be much better. And this year we are increasing our exports by about it's going up marginally though this year, and it's going up to about by 30 crores, which is about 10%. But next year we will be 500 crores plus back to the 23 level, and there you see the complete change in the balance sheet.
And sir, what leads to be that much positive? Any new order that we have got? If we can discuss on it.
Yeah, we mentioned that we last year we picked up. We pick up orders in one particular year, and the total orders we picked up last year was to the tune of 720 crore, 720 plus, and that we had declared also. Now those are the orders in hand. Which we received from both the domestic as well as the export customers, overseas customers. And the year before that, we had picked up orders worth about 350-400 crores. And those, what we picked up the year before that, those have started maturing and we've already started production of those. Out of the 720, we would be adding about 150 crores this year. And almost about another
next year,
320 crores additional next year. That would be 420 out of the 720 crores. And the third year from now, it will be this. We'll be doing 720 crores a year. Now these are the confirmed orders where the advances have been received, where the letter of intent, everything has been received.
Okay, thank you, sir. And sir, if you can guide us on the top line side and margin side overall.
So I did mention that this year our target is 2,652 crores, 2,652 crores, and say 2,650 crores. That's having said that, the orders we received just a couple of days back, which some of them will start production by September, October this year. We should actually be able to process 2,650.
Okay, thank you so much, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Rohit from iThought PMS. Please go ahead.
Yeah, good afternoon, everybody. Sir, some questions from my side. I'm fairly new to your company, so pardon if they are very basic. So, sir, if I'm looking at your company for the last couple of years, we've sort of stuck at this stagnant level of 2,300 crores. This year was a bit lower. And I was going to some of your previous calls, you mentioned, and just to your previous participant also, that exports were a bit lower, and that is probably one of the reasons for your margins to go down. So if you can just maybe step back and explain what was the reason for the general sluggishness since FY23, the last 2 years? That was my first question, and then I have a couple of more. Hello?
Just a minute. Okay. One is if you look at our exports coming down, it primarily happened with BMW. Their sales of electric vehicles in Europe came down by 40%. And we were the single source supplier to those EV components for Germany. And that reduction was huge, and we had extra stocks also lying there in Germany, and the further shipments had to stop here. We had to reduce our production here. That was one. Number two was PSA. They had extended a program till the end of the year, but they didn't realize that. So that sale was also pretty large, which could not be. The goods are ready, and now they're going to start consuming it this year, and that's what is going to happen in the export side. In the domestic side, Renault did not perform at all. Their performance was very poor last year, Renault, Nissan, and that impacted us. Now they're picking up, but primarily because of the exports. For the domestic, we are very cautious in picking up orders for the domestic market as far as Renault and Nissan are concerned. But for the export market, we are more confident, and we have diverted that portion of the equipment for the export market to Renault, Nissan for this year. And Kia, their performance was also lesser than the previous year. And so these are the 3-4 customers who actually brought our sales down. The capacities were already created. Then there were 2 programs which got delayed. One is by Toyota itself, and that was a turnover of almost 100 crores, and Aisin. So it's the same program, Aisin and Toyota, but Aisin was going to supply the transmission, and Toyota was going to supply the complete hybrids. Now, this year, they are increasing the capacities. Our capacities are already in place, and we are excited about that, and I think it's going to be much better this year. So this was the main reason why the sales dropped. So this year, we are expecting a sale of 2,650 crores plus, and next year, we already have a budget. So next year, we are about 3,100 based on the current orders in hand and current programs that are already with us, and which we are implementing, and or which we should start delivering by the end of the year or beginning of next year. So these programs are in place, and having said that, there could be some delays in some programs, but now we're not anticipating delays for Toyota and others, because they are after us to deliver them in time, and because their hybrid sales are suffering at the moment. And so there we are very confident. And Renault, we have discounted absolutely for the domestic market, but for the export market, they have started picking up the goods. So there's a lot of excitement in that direction as well. So we're full of confidence of 2,650 this year plus, and 3,100 next year. Now, having said that, we've already picked up further orders, some to be delivered this year onward, which were not factored in this. That would be an add-on, and that would also add to the figures of the next year.
Got it. So thank you for the very elaborate answer. So the second question was in terms of margin. I think you've been saying that you are very, your aspiration, or you want the margins to be around 13-14% at a company level, and that is where your endeavor is. And of course, you mentioned that exports were down, so hence the margins got impacted. So in that journey from, let's say, 8-9% or 9-10%, which are right now, so to get to that 13%, how do you see that journey over the next 1-2 years, if you can share that?
Yeah. So, if you look at the cost, we have been able to improve as far as the like power cost. That is actually, we've saved a lot on the power cost. There's a lot of working that has happened on the power cost, mainly because we've gone into solar and hybrid power through windmill, etc. And that's helped us to reduce. And number three, we've invested in very efficient furnaces where we've been able to save a lot of power. So, the full impact of that would appear this year. In the last year, since it was being installed over the year, we could still do some savings there, but this year you'll see a larger impact on the power. So as far as the various costs are concerned, there's full pressure on monitoring what is happening there. Now, the problem was the utilization of our plants. We have surplus capacities as far as the castings are concerned. And those castings where there's a lot of investment involved, those castings were not running at full capacities, which now are being utilized better with the addition of railways and also some of the non-Brunswick components we picked up. In the iron side, in 2 years' time, we'll be running at almost 90%, and we'll need to add some furnaces to further enhance the capacities. But that we'll do 2 years from now. And that would change the whole picture. And because the manpower remains the same, the plant is fully automatic, the same people run the plant 24/7, and we were running it only for 15 days or 16 days a month. Now we'll be running it for 20 days and then going up to 24, 25 days or 26 days a month. So that utilization itself gives us a lot of saving. Then in the casting side also, and the aluminum side, we've improved our casting capacities by improving our efficiencies, and we are getting more per day from every machine than we ever got. It's almost a 20% improvement we did as far as the casting is concerned. So rather than running the machine, we shut some of the machines so that we could the machines which are running would run at full capacity. So these changes which are happening, and now with new orders coming in and the balance capacities, the die casting which we had shut, and we start utilizing those capacities, you will see a complete change taking place. So this 13% is doable, and so we worked it out. And once we have at about 2600, our utilization capacity is much better, and you will see the change this year itself.
Thank you, sir. Again, very helpful. So just two more questions, if I'm allowed, if I can go ahead, sir.
Yeah, please.
So, yeah. So, sir, if I look at the balance sheet right now, so we have about 750 odd crores of debt, probably around 700-800 crores of debt, if I'm not wrong. And of course, as you mentioned, you've expanded the capacities based on certain orders which got delayed. So, over the next 1-2 years or 2-3 years, how do you see this balance sheet evolving? Maybe if you can share a bit on that. And also, sir, I think we have some surplus land in Gurgaon, which we have mentioned in the last, in our interactions previously. So, any thoughts on that, and how are you thinking about this whole leverage situation right now?
The total debt console is about 660. 660. But you'll see the debt come down this year itself.
Totally.
And that's a pressure from our board also. The land you're talking about is the Gurgaon land where we are currently sitting. And this land, this is about 27 acre parcel, and very prime land right on the main road, Delhi-Jaipur highway, prime land. And so we have been talking to various people so that we could monetize this land, and we have it in mind. But if I cannot distribute enough money to my shareholders, we are not going to do it. There were people offering the land that circle rate pe paise le lo, and circle rate we are not prepared to sell the land. And because shifting, this is a very large plant. Almost 2,500 people plus working here. We need to shift the equipment, machines. We are mentally ready for that. We have the space for that. We have the capacity to do that. But we also need to take permission from the customer, because anything that we shift, the customer has got to give us a clearance. Be it BMW or be it Maruti or be it Hero or anybody else. And we are mentally ready for that. But we should have enough money that we should get. If I'm getting only 200 crores, if I'm making a profit of 200 crores, we are not going to do it. If I'm making a profit of 1,000 crores, we are certainly going to do it. So that the shareholders also benefit by that. Yeah.
Got it. And
let me tell you, the talks are on. We continue talking to the big builders like we're talking of Tatas and the Godreges and others.
Okay. And sir, one question on this export. So I think BMW, we have expanded on the EV side in the last few years. And of course, the slowdown because of the competition from Chinese side. But you're again gung-ho about the export bouncing back. So what is giving you that comfort? Because whatever we are reading on some of the German or European manufacturers of EVs, they're still like trying to fight this competition and they are still quite sluggish. So what is giving you that comfort on the demand side? And one more question on the debt. You said it will come down from 660 crores. Any ballpark number on how it will come, what kind of quantum it will come down there? Thanks.
See, our board has told us that we should try to reduce the debt by about 10%. That's the target they've given us. But at the moment, we are working on it and we are determined to reduce the debt. So that's the direction the board has given us, and they're going to monitor that on a quarterly basis. So that's on the debt side. And but we will be taking new debt also for the investments that are taking place. But we are also paying off, but we are also knocking off. We are trying to make our working capital also more efficient. So that's where we are working on, and that's what. In fact, most of our board members are finance guys, and they are totally clued on to this, and so I think they are very particular about this, which is very good for us.
Working capital will definitely come down.
Yeah, working capital come down.
Yeah, long term. We'll try to bring it down.
लॉन्ग टर्म तो नहीं कम होगा बिकॉज आप उतना 140 आप वापस करना 130 आप लोन ले लोगे बराबर रह जाएगा. So on the export front, to give an example, at GKN from 80 crores we're going to 120 crores this year. So that's a major increase will happen for GKN. There is one particular customer, and that customer is catering to Ford and GMs and BMW also in the US. And various other customers. So we are very confident of that. And then the other customer is Norbrams there. That's a new addition, and there also the supplies have started picking up, and and that also helps us to improve the utilization of our foundry. That's the best part.
Got it, sir. Got it. I'll come back in the queue. These are very useful to me. Thank you so much. I'll come back in the queue.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Abhishek Kumar, an individual investor. Please go ahead.
Hello. First of all, congratulations for the projections you have provided for this year. There's few things that I want to understand. The number one, you told about how the export is going to pick up, and the aluminum price has gone down. So can we expect a better margin here?
I'm sorry to interrupt, Abhishek. You're not quite clear.
Yeah,
please come a little closer to the microphone.
Yeah. The next, you told about the Hauser plant, which will have a capex of 220 to 230 crore. So how much revenue we are expecting from it, and what would be the EBITDA margin? Because you told for the exporter, it will be higher. For the passenger vehicle, it is higher, but for the two-wheeler, it is very low. So what is the margin we are expecting from this 220 crore project?
The turnover there at Hosur is expected to be close to about 350 to 400 crores. So that's what the expectation is. And with the investment is in land building and also in the equipment that we are talking about. The land building is almost about 50 crores. And the balance is the equipment that is required to be installed there. And we expect we should cross a turnover of 400 crores there. And that's one. And the margins are, like I mentioned earlier also, the car business, the four-wheelers, the margins are better than the two-wheelers. And this is all car business. And this is also car plus, I would say, mainly because this is related to the electric vehicle and also the hybrid vehicles. These are very complicated components that we are going to supply, and these are premium components.
Okay. And this year margin, this quarter, we are expecting some improvement to happen because aluminum price has gone down?
In the last balance sheet that you see, there's a carry of almost about 14-15 crores in the aluminum side. And which we will, because now the prices are coming down, so that advantage we will get this year. And I hope the aluminum prices keep on coming down. So that's the important part. Yeah, you will see a margin. But thanks for congratulating us, but I think we could have done a better job. We should have done a better job, and we should have got better margins. Our target is to improve our margins. We are not satisfied with those margins. Yeah.
Is our long-term debt, which we are planning to pay this year, apart from what we are going to raise, but what is standing as on date, how much we are going to pay for this year?
Repayment is 140 CR.
So 140. Okay, perfect. Thank you. Thank you so much.
Thank you. Participants, please press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to participants, you may press star and 1 to ask a question. A reminder to participants, please press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for the closing remarks.
Well, ladies and gentlemen, thank you so much for taking the time out to listen to us. But let me tell you that we are not satisfied with our results, and we need to improve them. And we are all working in that direction. And you will see it this year with better utilization of capacities, the margins coming back to whatever we have been mentioning to you, and those are achievable margins. Those are right there. The cost reductions that we've been working on manpower reduction and others, those are effective, and we see those results, and the power saving and the tooling costs, etc. And the improvement in productivity on the equipment, and all those things are actually on place now. And you'll start seeing the results in this year onwards. And hopefully there is no major disruption that takes place. And we are very hopeful that this year would be a good year. And this year and the next year are going to be very good years. So very excited about the orders in hand. And the growth is primarily coming from exports as well as the domestic market. But in the four-wheelers, two-wheelers also grow. We don't leave the two-wheeler business because that is very important as a filler, like I mentioned earlier. But our focus is primarily on the four-wheelers and commercial vehicles, and now, of course, railways and defense, and also the exports, which are better margin items. And you see the change that is going to come about. We've been saying it last year, but this year we assure you that we will achieve those results. Thank you so much.
Thank you, sir. Ladies and gentlemen, on behalf of Rico Auto Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.